Welcome, lady and gentlemen. Lady, I said it again, Nick. Why is that with the lady? I'm focused on it. It must be my wife, yeah? She's the apple of my eye. Let's try that again.
Holy fucking shit, it's a dinosaur! Jesus Christ, what the fuck?
Welcome, ladies and gentlemen, to the last Grey Market talk of this year with my famous, fortunate guest, Nic Themistocles, former portfolio manager, bond trader, bond arbitrageur, market hooligan. Anything else to describe you in that, Nick?
Throw some golf in and make me feel good.
And of course, golfer. Why we're recording this on a Saturday. Tomorrow, with this weather, Nick has another tournament out there. I hope he'll win, but I think that's why you have this. How do you call that in golf? Now, what's the rating you use that you can make?
The handicap.
The handicap. That's why you have the handicap, right? So you can play against far better players and still feel good.
Absolutely.
Yeah,
absolutely right.
So I got this in, and who am I? Thorsten Wegener, you know me by now, former options market maker and YouTube teacher who has the fortune, or is fortunate enough to have Nick every Sunday on the line to talk about markets. And today, as you've seen, I haven't prepared any quite interesting slides because I thought what we're going to do is now we have a look back. We started this whole venture in May this year, Nick, right?
Yes, this is, well, I think it's 32 weeks ago, but it might be 33 or it might be 31.
We are 33 as a Freemason, which I'm not, but 33 is the magic number, I've heard. So we're actually on 33 today.
Wow, there you go. Yes, so we started 33 weeks ago. Work that out what it is. Sometime in May. Was it May or March?
May. It was May. And we experimented with all sorts of crap. You remember when I thought, okay, let's put on nice thumbnails and made artificial intelligence pictures out of it, which we then ended up both not liking. And then I thought, ooh, maybe we'll get more viewers if I stop smoking because there might be an evil algorithm in the market. And today I think, well, screw the algorithm. I've got a nice cigar here, which I'm going to smoke while we have our conversation here going on. And we're not bothered about what the algos say. Oh, by the way, there was a nice article. I don't know if you whether read it. I have it on my reading list for the weekend on Macro Hive. One of my colleagues there wrote an article about what if actually the market we find out has not been independent for years. There was, he called it Croesus, already in algo, steering the market for what seems to be an eternity, and everything we do is completely inconsequential. What do you think about this theory?
Well, I've got to read the article, is all I can say. I don't know about what we do is inconsequential. Everything we do has consequences. But whether we can steer the market, I mean, why should we want to, you know? I'm sure there are people who probably do. I mean, we always heard about these plunge committee or whatever it was called from the
plunge protection team,
plunge protection committee or something like that team. Yeah, indeed, stopping the markets going down. But in the end, they do that. And if you think back, and I attended a talk from I think it was Russell Napier recently, where he too mentioned that the markets have kind of figured out that the central banks will always have your back. And I thought, well, you know, we began our talk 33 weeks ago, effectively saying exactly the same thing, that whatever happens, you know, the system has to protect the system from collapse. Yeah.
Isn't that Herb's law? Everything that can't go forever will eventually stop.
Well, you know, if this thing stops, you know, God help us all, right?
Yeah,
I mean,
that went through my mind as well.
That is. And I think, you know, I took on a client about 4 years ago or three and a half years ago. And I think one of the first things I said to them is pretty much the same thing, that, you know, you will be fine because at the end of the day, the system is going to protect the system. And then somebody asked a question. I said, well, you know, let's hope for all our sake that your scenario doesn't happen. And so far, you know, when you look at the fragility of the financial markets, the thing still holds together. And we've had the major real estate collapse in China. We have the mother of all debt bubbles in Europe and the States. it's still kind of, it's held together by sellotape and glue and hope and whatever, and it's still there, right? So
they almost blew it in 2008, right?
Yeah, well, yeah, that's
almost,
isn't it? Yeah, exactly. That's an almost thing. But of course, your old firm was victim to it, but it wasn't really a victim because it didn't need to go under, I guess. Yeah. I mean, there are still things in the market. When they do blow up, though, think about it. Every time when something goes wrong, there's a team of people, either at central bank X or Y or Z, who are just going to be there and say, okay, how much does it take to seal, to protect, to keep this thing going? Because the consequence of it not working is just beyond thinking about. And you've got depression, and you've got sort of chaos in the streets, and then people will want to get rid of politicians, and nobody wants that. Well, nobody who's a politician wants that.
Yes, I was about to say.
The rest of us might want it, but no. The reality is that they don't want that. Nobody wants that. Not in any regime. Whether it's Russian or whether it's Chinese or whether it's American or European. Nobody wants that. And Kwasi Kwarteng, his budget, which allegedly, I still don't believe that actually. He made a talk recently, but his budget theoretically sort of threatened to take out some insurance companies and pension funds in the UK. Well, and who was standing there with liquidity? It was the Bank of England, who probably 1 week earlier was saying, we are going to sort of withdraw liquidity, and then something happens and they throw liquidity into the system. So for the moment, I still work on the underlying thesis that the central banks have our backs, and then we've just got to think of what's the consequence of that at the end of the day. And the consequence is they're debasing your money at the same time, and that's why we have to think about 33 weeks ago we began with well, what do you need to do about that? And that's the gold, that's the Bitcoin, that's all of this other stuff.
Then square the circle for me. On the one side, when we discuss, we always think they're inept in what they're doing. They really don't know how to interpret data. Every decision they make, it's either too late or too fast. At the same time, in this conversation now, we think, no, they're really smart cookies. They have everything under control. Is it just random? My theory, everything is random?
Well, no. Okay, that's a different topic. Are they really smart? I think in their day-to-day, steering of the economy, creating the booms and busts and all of this stuff, I think they truly don't understand what they're doing. And so, they're not as good as they think they are, and they create a lot of chaos, unnecessary chaos for the rest of the world, for the people of the country. But they have, they open their drawer, and they say, when all goes bad, they have learned one thing, just to push this button, and that button is the liquidity, thing, and they know that always works, and so they kind of understand how to get out of a problem, but they always get themselves into a problem, I think, unnecessarily. But so they know how to get out of problems, but they're the people who get us into the problems in the first place.
Then let me dive into one of the points where I actually was right for a while, and now I'm wrong again. Morally superior, obviously, in my decisions and analysis. The DAX. Now, if I would have had DAX holding, which I didn't have, I said, now is the time where you actually should sell them. So it looked as if I actually sold the high. Then we had a 10% correction in there. And now you look at the chart, we are seeing new all-time highs in one of the crappiest economies Europe has. The question is, what is that? We discussed that right from the beginning. What makes market go? You already mentioned it, liquidity. Is liquidity just the main point? Or are we already one step further that the market has sniffed it out? All this liquidity will eventually lead to really, really bad inflation. I don't want to call it hyperinflation, but really bad inflation. And the smart guys are already saying, you know what, I don't care. I buy real assets. I buy equities. There may be wobbles further down the line, but fast forward this whole thing, it's the best place to hide my money when they keep on printing and printing and printing.
So, I sympathize with the view where, and again, we began this 33 weeks ago when you said, well, look at the economy, look at copper, look at all of this stuff going on here, look at these leading indicators, look, and we all try to justify these investments as if that the economy is, if you like, the be all and end all of everything to do with investing. And I think after sort of many years of being in this business, it became clear to me that there was something going on in price action, which was different to what was going on in the economy. And I learned this from my time when I was at JP Morgan, where there was a macro guy who understood the economy really well, but his investments weren't working. And it was also puzzled me. Well, what the hell is this? How can you ever be, because he was a really smart guy, knew exactly what was going on with the economy, but it could never make any money out of it. And where does that all come from? And I think that sort of led me to this first kind of investigation into, well, at that stage, I looked at Elliott Wave, and there's many things that you can look at, but I had to basically say, how do you do this? How do you not look at the economy when you're making investments? You've got to go and look for other things that actually help you steer your investments in accordance with price action, as opposed to stuff that's over there that perhaps isn't linked. And recently I spent a lot of time with cycle analysis, because again, cycles always repeat themselves and is always quite helpful. So the point being that I learned early on that investments and the economy are, they may meet up at some stage. There may be a timing gap between the two. But for now, don't look at the economy and the market and expect the two to have a timing overlap and everything. It's just not there. So we must respect price action. And that's why price action is everything for me.
That's one of the things that puzzles me because, well, since we are in the market, you had the imprint on your forehead. Yes, markets are the best predictor for what the economy will do. Yeah? So you should actually see that the stock market start tanking before the real economy starts faltering. What we're seeing at the moment, the real economy is faltering. Yeah, the data is undeniable, and the stock market says, yeah, whatever. I keep going on. So the explanation or the traditional viewing at things seems to be obsolete. And that is one of the things, yes, options is a nice tool and it can protect me from actually losing money in these markets. But the logical connection, we all were trained to follow up for the last 20, 30 years. At this period in a market seem to not work. And that's when I'm always get curious when it seems as if a new paradigm has come into the market, and this time we've used it before. It's all totally different. And it eventually turns out with a big bang that it wasn't different at all. It's just that we had these lags, these delays in there. And well, in our conversation, we crossed it over and over again. Never in the history of mankind was so much money thrown into markets in such a short period of time. Of course, all our frameworks seem to be completely out of whack at the moment.
Yeah, and I think the point about new paradigm and is it new paradigm and everything you've learned is different. And one of the first things you learn from Michael Howe's book, and Michael Howe's been on sort of plenty of these talks. One of the things that he says is that we're not in the old world where we were financing expansion and growth through investment and savings. Now we are in a refinancing world. And if we're in a refinancing world, then the most important thing that we need to focus on isn't GDP per se. It is, in fact, the liquidity that's in the system, because if we can't refinance ourselves, then we are in an awful lot of trouble. So whatever happens, whatever is going on in the economy directly here, effectively is saying that we still need to refinance our debt. And what does that do? And this actually leads it the other way around, that the liquidity that you throw into the system effectively finds its way into the economy. So it's instead of the economy driving the markets, if you like, it's the markets driving the economy, because what the authorities are effectively doing by putting so much liquidity into the system is they're saying, well, okay, we need to get growth. We need to, put some money to continue to get this thing working, because if we stop refinancing, then the economy will tank. And so the other way around, they're saying, okay, we need to refinance these real estate debts. We have to refinance these banks. We have to refinance, the financial system. And that keeps the system going. And, we know that we look at the debt of the US and we see this thing just goes that way, and it's just never ending. The borrowing that is required by the US is just humongous. And we kind of say, well, what is the outcome of this thing? And the outcome is, if they don't find a way to refinance, then the system will blow up. So on the basis that they can't let the system blow up, they need to throw money into the system. And, that just means central banks, that means debasement, that means, they have to do whatever it takes. And that keeps the economy going. Everyone's looking for a recession. Everybody, 2022, end of, beginning 2023. They can't have a recession. Doesn't matter what the Fed say to you. So, they have to keep this thing going. And I guess that's what happened. So is it a new paradigm? I think it turned into a new paradigm post 2008, because that was the point when kind of the central banks really started to just, give
whatever it takes, right?
Absolutely. I mean, everyone is whatever it takes. Japanese, it's the Americans, it was Europeans. And the moment you change the world to, putting a base level of liquidity under the system just to keep it afloat, this is the consequence. This is what we've got now. And that's why you've got the German government struggling, to borrow money. I mean, as I say, whether it's allowed or not allowed is totally irrelevant. They'll find a way. They'll do whatever it takes to make sure that they put the money into places where they want to put the money and keep things going.
Well, that's what the market seems to be playing in Germany at the moment. Yes, the EZB will take interest rates down. They will do it massively. And as German companies are mostly international and not just exposed to the crappy German economy, they'll eventually move away. And then you find a marketplace where interest rates are going down to zero again. And you have companies which something might still be reasonably of reasonable valuations. And then yes, the liquidity stream hits the market, even though I wouldn't, or the market is super clever. And this coalition of socialist weirdos will disappear very soon.
Yeah, I mean, sort of the implications on, what's going on with the markets and whether that actually influences the type of politics that we have in the future. I'm also a believer of that. Yeah, I mean, you just cannot have the same kind of management style, if you like. And this is not about Germany or Europe or UK or US. It's the lot. You can't have this kind of management style for the economy, the type of economy that we've got today around the world. You need to think of something different. You need to behave differently as a manager. Otherwise, the worst happens is the people vote you out. Yeah, and then they go and choose somebody you regret.
Oh, if they would have opened the history books, Weimar Republic is the best example, when the democratic forces actually seem to be completely unable to solve the problems and were just circling around themselves. What happened? Adolf happened. Yeah. It's always in scenarios like this where you think, are you actually seeing what's going on? If you do not solve the problem the people have, the people eventually will turn to something nobody wants. And then you have the real pickle here. And that is always what makes me, very thoughtful about the situation we're on at the moment. It also comes back to the point, as long as the plunge protection team has all their tools available to save our asses, fine. But that only works until the breaking point is reached that people lose trust in the whole system.
Yeah, this is a real big thing, because this, in God we trust, and in the dollar we trust, in the government we trust. And when you lose faith in the system, then you're in a situation like, let's just say, like the Argentinians are with their peso. So they've lost faith in the peso. So they all collect separately dollars and they all transact separately dollars, but the government are kind of doing their thing in their own little world with their pesos, and they have inflation of 200% because people have lost faith in the system. So they run a parallel system, and whether that parallel system is a dollar or a Bitcoin or I don't care what it is, but it's something they're saying, what you guys are delivering to us, we have no faith, so we're going to run our own little world here in dollars in Argentina. And that's what happens.
When I bring you back to the continent, because you're obviously a Brit, I'm not saying that with a smile on my face.
I'm also Cypriot, if that helps.
Yeah. For the purpose of that conversation, you're a Brit now. So you're a Brit, and we have that situation. The Conservatives in the UK, who are running the show now for 12 years, completely buggered it up. They have some proto-socialist policies running the country, not as conservatives, but as I don't know what, for the last 12 years. And they are predicting a huge electoral defeat in May, June next year.
Yeah.
So we're already there that the people, they actually do not want to vote for Labour, for the socialists, But that seems to be the only, due to your electoral system, first past the post, that seems to be the only alternative they have. So the guys who were doing it for 12 years blew it. And the people now have the only choice to vote for the other guys who are probably far worse, even, if that is possible, in doing it. When is the breaking point reached? When you say, okay, well, fine, that's it. They will not trust governments at all anymore. People will stop, my dream, stop paying taxes, stop following stupid rules, and rely more on, well, what made countries wealthy, prosperous, and educated in the past. Because before that happens, we have this, we've heard that before, this fourth turning, or the fifth Kondratiev cycle that usually ends with a big bang.
Well, it's, again, that's another one of these cycles that repeat themselves, these generational cycles. And yeah, I mean, that's quite possible. But, let's come back to the UK. The Conservatives had a go. So this team blue, let's just say, they had a go, and it didn't work. I mean, I still wonder about this left and right and middle and centrist and not centrist and extreme. These are managers. They're managers of a country, right? And quite. It was in 2022. I was in the UK. I was in a client's place. I was in the kitchen making a cup of tea, as you do, and there was a television on, and there was somebody talking. I thought it was a Conservative member of Parliament, and he was talking about investment and sovereign wealth fund and future and all of this stuff. And I thought, oh, good on him. I'm sure he's going to be a candidate to become leader of the Conservative Party at some stage. And I just glanced at it. It was Keir Starmer, the leader of the Labour Party. So, and I thought, it doesn't matter. Team Blue had a go. Team Red's going to come in. Perhaps this Team Red is not really sort of the Labour that we stereotype Labour with. And it's just, people who want to be good managers. And maybe he's a good leader and he's got a team to pick from, God knows how many MPs. Let's hope he picks some good team members. But remember, the good thing about the UK is that they don't have to ask another team whether they do something. So they don't have to ask Team Green. They don't have to ask Team Orange. Yeah. We have your permission. And I think just the fact that you've got an absolute majority in the UK now, absolute majority in the future, most likely, it puts them in a very good position to actually do stuff. They may still cock it up. They've got good track record of cocking things up. But at the end of the day, I think they're in a reasonably good position to do good. The problem comes, as we talked about in the past, these kind of coalition type governments you have in especially in Germany, where indecisiveness, where you compromise on in the end you achieve nothing, and I think that's the
well you wanted us to have it. Now you're the Brit again. We have this system after the Second World War because the winning parties decided if we ever give them democracy back, these morons, because they abused it once, let's make it in a way that actually nobody can really do anything of consequences. And that's what we are now suffering through, because the quality of our political leaders has really deteriorated. You don't have to be mean or anything about it, but where we had guys like Friedrich Genscher, even like Helmut Kohl, like Willy Brandt, like Adenauer after the war, like Ludwig Erhard, even like Gerhard Schröder, SPD chancellor. They were intelligent people who had the background of coming out of hardworking environment. They made decisions, and I believed them that they made decisions for the people in the country, not just for their elite group of party officials or their bubble they're surrounded with. And we seem to have lost that completely.
Absolutely. I mean, you mentioned Gerhard Schröder. I remember when he lost the election to Merkel, and I was sort of, again, foreigner in Germany at the time. But I must say, I thought he was really a great leader for Germany, and I think the track record since then. I mean, I know people aren't particularly happy with him today, but the track record since then has been abysmal, and that's a pity.
Nick, I was living in England at the time, and when Schröder was visiting Tony Blair, it was this good-looking guy with a cigar in a Brioni suit, a German statesman coming over. Yeah, he was capable. And then Mrs. Merkel won, and Mrs. Merkel visited, I think it was Brown or Blair at the time, I don't know. And you had this lady suddenly showing up as if somebody had beaten her through Topshop. And I thought, bloody hell, the German Chancellor visiting the Prime Minister of the United Kingdom, Northern Ireland, and Scotland. And I was really ashamed. I thought, no, can't be. That is absolutely. And well, we've seen what we got in Germany out of her. But obviously, okay, UK. But one of the points I wanted to make, I wanted to interrupt you earlier there, but then we came into the flow because you mentioned Japan in this whole scenario. We call Japan right. Obviously, you and I were talking about it long before May, before we went active. But I think evidence is on the record. Topics up 20% or something. We got the call right there. The only point I want to ask you now is, they had 30 years where they were printing and printing and printing and printing money. They still had a deflationary environment. And for 30 years, their stock market did do jack all. Now they actually start violating, becoming into, you know what? Yeah, let's give the market a little bit more leeway. And suddenly something happens in Japan over there. How do I get that straight?
Well, they were pumping money into the system, but they were pumping it in the wrong way. And if you look at if you listen to Professor Richard Werner, he is a brilliant guy, and I think he's the guy who even invented QE. And he explained to everybody at the time that there's QE one way, and there's QE another way. And the QE that they adopted was keeping the money within the financial system, and what they needed to do if they wanted to reflate their system was actually to put money outside of the financial system and effectively buy bonds from other than banks. And they never did, and so they did the wrong type of QE. So they achieved nothing with all of this stuff. They wasted a lot of time. And if you want to reflate the system, you need to get money into the economy and outside the financial system, because at the time, what were the banks doing with their, we know they were just repairing their balance sheet. So you were just keeping the banking system kind of afloat. But at the end of the day, it didn't really do much for the economy. And now you see that there is a little bit different type of QE taking place, managed to achieve a little bit of inflation. And in this respect, that's a kind of a good thing. And lots of things are happening with Japan now that weren't before. Now, obviously there's an aging population, but there are older people are working longer, they're much more productive. There's still some really good stories, about Japan. But you're right, they wasted a lot of time with the wrong type of financial policy, if you like, from the central bank. And, shame on you guys for the Bank of Japan for not getting it right at that time. But I think, now they seem to have somebody with his head screwed on and doing the right thing.
Yeah, I remember us talking about the Schroeder's research they were sending around on LinkedIn. And the most interesting point for me was actually the valuation of the whole of Japan. Cheap as bloody chips.
Yeah.
So what's our outlook for the next 12 months, Nick? We're staying long Japan, I assume, right?
So, my thoughts on investments are broadly that I think we're all okay until about 2025. So the cycle is good for investments until 2025, at least. So that means that, Bitcoin, gold, stocks, bonds for a trade only, possibly emerging markets, but we need a weak dollar. All of these things are, if you like, the outlook for the next years. And so everyone's been expecting, end of the world as we know it. It's awful when you look at YouTube just how much, crap there is there, frankly, useless views, unhelpful views, confuse a lot of people. But but things can go wrong. And what could go wrong? What's the biggest thing that I think that would worry me today is if the dollar does strengthen, if the Japanese yen weakens substantially, let's just say above the 150, and if the decisions from the Japanese government are such that they effectively say, because remember, the Japanese, they've got a lot of debt, but they got a lot of assets as well. I mean, they own a lot of the rest of the world.
Hey, that was your old theory. Just clap your hands together and you're debt-free.
Yeah, I mean, that's right. I mean, it's like we talked about the debt in the States. If you revalued gold at $20,000 an ounce, let's just say, you don't have any debts. You've got net debt zero. Yeah. Move on. Collapse it to give this to the people and say, okay, we're resetting. So the Japanese, if they were forced to support, of course, because the problem is they can't just sort of intervene in the markets all the time. Say, okay, your size is my size. I'll buy the yen dollar, the dollar yen are at 150. And because then they can't stand there. They'll be run over. So the only thing that they can do is to say to the owners of these international assets is, look, guys, right, I want you to go and buy JGBs. And that means you sell treasuries, you sell S&P, you sell bunds, you sell Italian BTPs, and you get this money home. And then, the yen will strengthen. But the rest of the world, is there with a real problem because, they own a lot of international paper. And that is just something, that's a big fear. And it really all depends on the dollar. That's why the dollar has to stay weak. And if the outlook still, in my view, that the dollar stays relatively weak, that allows China to support their economy, allows Japan to support their economy, allows the Europeans to do stuff. That's basically the key is the dollar in all of this thing. And so that's what, but the consequence of a weak dollar on top for investments, you need gold, you need Bitcoin, you need stuff because you're going to be debased.
Oh, they can always print some more, right?
Well, think about who is, that's right, actually. All of these debts that they are producing every year, this year is 1.7 trillion. Okay, so next year is going to be probably 2.7 trillion because they have the interest on their debt. Yep. So, where does this money come from? The problem with that is if it's not the central bank and you force institutions to buy your debt, then the institutions just will be crowded out, if you like, from investing in the economy. So the whole world, or the whole American kind of culture there is going to be about just everything you've got goes into the government. And that's a recipe for disaster. So we know it's probably going to be a lot of the central bank supporting the parts of this debt bubble that they've got because there's no other way.
It's actually, you mentioned disaster. There are a couple of interesting elections next year coming up. I've heard again, Donald Trump is seen by the guys who know numbers as the front runner.
Yes, indeed.
Year. So that would actually be very, very interesting. I saw this interview last week recently where he was asked by who was that? It's the Fox guy, asked him, so the market is afraid, would you be a dictator? And his answer said, no, only on day one, to sort a couple of things out, and then not any longer. But it was quite striking to see this. They're roughly the same age, yes, him and President Biden, but holy moly, you have this one smack-talking guy, absolutely on top of his game, yeah, looks strong, looks viral, everything, and then you have President Biden doddering around, mixing up Britney Spears and what's the other one? Person of the Year, even on the Time magazine cover. God, I'm too old. Female superstar.
Female superstar. Well, so
has improved the Danish economy by giving a concert there. Britain.
Taylor Swift, or
Taylor Swift, exactly.
Really?
So, yeah, he messed them. He messed them up. One of my guys said, "Oh, can you believe that?" In the chat, he messed up Taylor Swift and Britney Spears, and I thought, oh, it could have happened to me, right? I don't know, but it is quite striking if you see that and you think, yes, Biden was the president who beat Trump, but could he do it again? Could he actually run through this whole cycle of election having competition and having talks when everybody knows Vice President Kamala Harris is in the sidelines, while Trump is probably going to be clever and picking Vivek Ramaswamy or somebody young, viral, to say, fine, we have a follow-up candidate here in the lines. What's the consequence for the markets? Because when Trump won the last election, I closed my eyes and bought shit because I knew, yes, that is what happened, and I was right there. So I would like to do that again, but I would like to see a nice dip in stock markets beforehand.
You had your dip. We were talking about that six months ago.
Yeah, well,
was the dip.
We were along the right stuff anyway.
I don't know how much it dips again, right? So, yeah, I mean, that's a fair point. So I think we're still in this kind of wave 1-y thing, and we might get that dip down to let's just say 4,000 or so. I mean, I don't know. I haven't, it's a difficult count, I must say, even for me. I see, I've lost you there. I see around, 5,000 or just around 5,000, whether it's 4.9, whether it's 5.2, whether it's 5.5. I mean, we have to see how this thing goes. But Trump, as a candidate, would he be good for the economy? I think is really the question. I think, firstly, we hope he's the guy who's going to be not the warmonger, but the peace bringer to a lot of these conflicts, and that'll be a good thing. Yes. So that's the first thing. The second thing, he was a very pro, reducing taxes for corporates, and that was a big win for the stock market in those days. Now, to be fair, if you look, we talked about this, I think, before, that the earnings for US corporates has been growing. Mainly the post-tax number is where the growth comes in. So the net earnings, if you like, from companies. And that's because the tax burden for the corporates has been falling. So, that's a positive thing for the market. But the question comes, the rest of his party, so less government, that's a really good thing for no waste. That's a really good thing for the president to do, is say, okay, we don't have money. So where do we find money? We get rid of waste and we put it into things that are needed, and then we don't need to increase the deficit. So there are things that he can do that will, how should we say, improve the situation and be good for the economy and be good for the market. What's the negative thing from him? I'd say there's less negative internationally for the US and for investments with a Trump than it would be with Biden as an administration. The problem still comes, however, that whether it's Trump or Biden, I think both of them have got a kind of an anti-China agenda. And the question is whether they find a way to work with China in a competitive mutual advantage, is what she always says. And it's a fair point. Yeah, I mean, you can't just sort of always be in conflict. you always want to try and work with people if they can find a way. I think Trump has probably the more chance to doing a deal with China and a mutual respect thing than again Biden. So I would say the markets are going to be more optimistic about Trump this time around. Last time, if you remember, they said, well, if Trump gets in, the market's going to fall apart, and it did. I think it fell about I don't know, Dow or S&P fell 800 points for about an hour, and then things went back to normal.
No, I think the whole relationship with China is interesting anyway. Everybody is about, oh yes, China controls the supply lines for pretty much everything, and the world will be in a worse place if things get ugly in that relationship. Yeah, but China doesn't have a middle class like the United States who could be independent. Yeah, if you just have the United States, they could feed themselves, they could live nicely. Yeah, they would have to pick up some skills again to produce shit, but they would get that sorted out. China needs the consumer, needs the West to buy their stuff. They can't actually ever cut off their own nose by going rogue in some weird scenario. So I don't see that happening. Famous last words, and then they invade Taiwan or something like that. But I think we're always exaggerating the power of China in this geopolitical game of chicken where we seem to play at the moment. It's always the question for me, who benefits from all these tensions we are building up at the moment? Yeah, we had Ukraine, now we have Israel again. China is always on the backlog. If there's nothing in the news cycle, we pull out Taiwan again and say, oh, the Chinese could invade. And then something else happened, it's been taken away again. The powers to be, the guys who are running the show, I actually like the end of the 80s, when the communists folded in. We were living in actually a very nice place. There were no glass ceilings for anybody. You and I were both normal kids from around the block. No Harvard education. Well, I don't have an Harvard education. No Harvard education. Yeah, they told us, here, trade a little bit of stuff. If you do it well, you get paid well. So it was a fantastic time. Now we're living in this weird world with everything is controlled, and we're building up fear on the left, we're building up fear on the right, and all our investment decisions are being run through that filter, which is happening at the moment. Millet, we don't want lefties in power anymore. In France, the right is winning. In Germany, the right is winning. The Dutch even have voted Geert Wilders in. The Tories, when people thought they were conservatives, had a stunning majority. So you see this shift away from this socialism, but we seem to get more and more.
Yeah. So
who is it? Is it Klaus Schwab? Is he running the show?
Yeah, I mean, all of these conspiracy theories, I'm sure even if they're only half true, I mean, it's pretty awful when you think about it. But sometimes you just need to, when you're in the markets, when you're trying to invest, when you're trying to think about what to do. The thing I see the most in YouTube and Twitter is that people are just joining dots, coming up with incredible scenarios. We don't. Trouble is, they say it so often, you don't know when the real one is going to actually sort of matter. But the reality is, put the blinkers on, control what's within your control, understand that we are in a fragile world. That means, leverage is not kind of an environment for leverage. This is an environment for steady, sensible investment, approach. Because of what's going on with debasement, you have to enter things which are kind of outside your comfort zone, and that might be crypto, and it might be gold. You have to think a little bit differently today than you thought of before. But trying to sort of second guess people who are, I'm sorry to say this, but you and I probably wouldn't vote for. At the end of the day, means that you're just going to be confused. You'll never invest. You'll just read. I'll give you one example, real life example. Boris Yeltsin. I was trading bunds at it was a time when I was JP Morgan, and I was trading bunds at the time. And I remember there was this sort of talk, if Boris Yeltsin dies, gets assassinated, gets taken over in a coup or whatever, it's the end of the bund market as we know it. And I've lived through so many of these sort of scare things that if you really do take so much notice of them, you would invest in anything.
Yeah, of course.
And that's what you could need to blinkers sometimes. Really important. Blinkers.
Yeah, but I like my good old conspiracy theories. The other week I was invited to a party, which I don't get a lot because I'm apparently controversial. Anyway, one guy, I'm a big fan, you know that, of the moon landing and always an absolute geek about this stuff. And there was one person who was actually springing on me that the moon landing was faked. Yeah. And I thought, how do I approach this topic now in this conversation? And I found a genius reply. I said to, you're one of those. You believe in the moon. Got him.
Yeah. Well, we all have our thoughts, and we respect everyone with their thoughts. But it's very easy to lose friends even in this environment when you talk.
Well, let's put it with these thoughts. Obviously, I was guiding you through the other topic which went through my mind, gold. Yeah, we've seen this. We discussed it last week on the show before this spike in the Asia session happened. We went up to 2,140, and then from official opening the next morning, in the proper markets, it was selling. And this is one of the things where I want to get my aluminium foil head out and say what's happening there is not normal market reactions. First of all, the move in Asia was fake, pulling this thing up like crazy. Obviously, a couple of shorts were taken out, but it couldn't have been large volume. But what worried me was the selling pressure that somebody with really deep pockets from the next day on started to depress gold. And I clicked up the chart and I thought, okay, if I would be a chartist, my chartist heart tell me, somebody does not like a monthly candle closing above the previous candles. Yeah, somebody was painting a chart here, a month-end chart, to say we can't have that. And that's where I have the conspiracy hat on. What would happen to markets if gold makes really a substantial breakout, which means people look at fiat, looks at paper currencies and what gold is doing in real terms? Then the next logic chain is, wait a second, who bought all this gold? Oh, it was Russia, it was China, it's all central banks. They bought 80% more, we had that chart on the show as well, than they did over the average of the last 10 years. When you see something like this, that was not a normal move, right? With deep in our trader heart, we have all seen stuff like that. That is not a normal price action discovery happening on a day like this, especially when the market then comes under pressure. So what am I going to do with gold, Nick? I'm a gold buck. You are a little bit of a gold buck. You're more a Bitcoin buck.
I've been a gold bug for 20 odd years. I've been collecting gold since the early 2000s.
And that's why I want to get your opinion. If I have gold and Bitcoin somehow in the same bracket, can I read something out of Bitcoin's development into the gold market, or is that...
Yeah, I think you probably can. I mean, the two are sort of reasonably well linked at the end of the day, or at least people see them in the same way that they are protection against a monetary inflation, currency debasement. So that's why they're both relevant to you. One is more leveraged play than the other. So last week I left you with the Bitcoin is just a high beta gold. Silver is a high beta gold. 2 weeks ago, I think it was 2 weeks ago, I put a comment to a client where it was before the breakout in gold, and I said, okay, so this is my forecast for gold, and I drew sort of the move down, which we saw, and then I drew a sort of forecast for a breakout on the upside, and then a move back down, sharp down below.
Yeah, that's what we've seen.
And the reason is because, this is it. This is a high that's been there for a while. People start to get excited. Everyone who's been bearish on gold, and I know a lot of people who are bearish on gold would have stopped themselves out. So in an Elliott wave pattern, and it would be totally meaningless to all of most of our viewers, what we saw was just a B wave of a sort of what's called an irregular flat correction. It means you correct, you do something which fools people into believing that we are suddenly into a breakout. They all pile in, and then suddenly there is no follow through, and the whole thing, comes back down again. I think that's the kind of pattern what we've seen. I am still of the view that gold doubles at least, if not more. especially with what's going on with debt, because, if governments have to continually debase your wealth and my wealth, just by virtue of the fact they need to print to pay their own debts, that something has to go up. So it's the things outside of the system which will improve in value, and whether that's parts of real estate as well, and gold and Bitcoin and all of these things. You won't necessarily see it when you're looking at the euro dollar. So you look at the euro dollar, or you look at, and you say, well, you do the yen or the Chinese currency, you say, well, they haven't moved. And then you say, well, actually, if you have a look against these things here, and that might be, sort of the gold and the Bitcoin and so on and so forth, they're the things that move. And this is the most important thing, for oil producers. Oil producers want to see, a stable price. But when they look at the price of their sort of oil versus the dollar, so when they get dollars for selling you oil, and so they say, okay, what do I do with these dollars? And they used to just go and buy treasuries. And then suddenly the oil price is going up and the dollar effectively is going down against the oil price. They say, well, hang on a minute, we want, it's all very well that oil price is going up, but it means the things we're buying with our oil revenue are going down. So the only thing that's really stable that they sort of might want to look at is versus gold. And so that's where it starts to come. If you are investing the wealth, the resources of your country, what do you put your money in? In the old days, it used to be treasuries, and now you can't do that because the sheer supply of treasuries that's due to come over the next 10 years is just, makes all of this thing go. So the only thing you can think about, the things that you would think about if you are a sovereign, first thing they do is gold, because it's traditional. You won't find a sovereign buying Bitcoin. You might find El Salvador doing it, or you might find somebody else having a go, but they'll buy gold. But what else are they going to do?
Yeah, you also don't get fired as a central banker if you build up the gold reserves of your country.
Absolutely, because when the central banker announces that he's just bought, 1,000 Bitcoins, the people are going to say, what the hell? So he can say, oh, I've just bought some gold and I've just bought some silver, and I'm not leaving the gold in the vault in UK or in America. That gold is in our store, and that belongs to the people. That is gold belong to the people, to remind them that the paper that they've got in the hand for the Chinese currency, for the euro currency, for the dollar, for the sterling, there is something behind it. And at the moment, the thing that's behind these things is air, and it's sometimes their own assets. So it's buying their own bonds.
If I would be busy in the world of economic warfare, especially on gold, how many times is the physical supply in gold actually leveraged up through futures? You're a central bank or a government of an evil state like Russia or China. You know what? Don't roll them. Let them expire. Let's have physical delivery, and all hell would break loose.
Absolutely, it will. And this is something that has sort of got my mind really in all sorts of directions. A couple of years back, somebody, I can't remember who it was, an analyst, a clever analyst, was saying, well, why is the gold price starting to fall? And the gold price is starting to fall because people were taking physical delivery and basically putting that gold away. So if you imagine that the volume of gold is, let's just say, 1/10 of the table in front of you, and if you take, and that table represents the amount of paper gold there is, and there's just 1/10 of it is physical gold. Now, if you take away that physical gold, you go and put it in another room, and you say to the paper gold people, right, now, where's your gold? And there's no gold anymore. So the paper gold that you see actually falls in price because you're taking away the underlying thing. And I must say, a couple of years back when I first heard this, to understand the sheer volume of paper that is out there, which is sort of, how should we say, leveraging itself on a very small asset, right? The size of the gold market is relatively small versus the paper that's out there. And when we discussed this a while ago, and it was about the Germans again selling their ETFs, but physical gold demand was exploding. So is that something where people are saying, I don't trust the paper world that we have, but I prefer the physical world, because the paper world is just paper. It's my counterparty as a bank or as someone else.
Think about it. Everybody like us who has been in the markets, had a couple of rodeos. We say, yes, we own gold. We like gold, but I would own it physically. Have your Kruger runs. Have it in a safe in a bank. It's your ultimate portfolio insurance.
Absolutely.
To feed your family, and that's where it's valuable. What I also find interesting, and maybe then we can close with gold, it's just this, we mentioned it last week, we have these triple tops in there, and the market is doing all sorts of shenanigans. I think for every sound investor who is not just thinking in days or in maximum a week trading, gold is at the moment at very attractive valuations. If you can get your hands on stuff, I would, especially in high volatility, sell some downside puts. If the market stays where it is, you have an additional nice income. You get a nice premium for it at the moment. And hey, worst case that could happen. You could buy gold now, or you could buy gold cheaper. And if gold falls, well, you've lost less with the entry you had through the put options.
Absolutely right. And
it's by the way, it's one of the first lessons when I start teaching options. It's always people say, oh yeah, selling puts is dangerous. And I said, is it really? How much can you lose? Well, a lot. I said, yeah, only if you leverage the shit out of it. But if you look at it as an equivalent for the equities, you can never lose more than an equity, even less. Oh, really? Yeah. And that's when they lose their fear of actually selling put options. It's just the questions, how much leverage do you put into the mix? Yes, then it can kill you. But if you see it as an equivalent, it's a nice way of getting active in these markets.
Absolutely right. It's a great way to learn about options. I mean, if you wanted to buy gold in the first place and you said, okay, I've got two choices about buying gold. I could buy it here at $2,000 an ounce, or I could buy it if the market goes lower. But and how do I do that? And then you sell a put, you get your premium for the put that you've sold. And if the market does go down there, then you're obliged to buy it, but you bought it, let's just say $100 cheaper. If the market doesn't go back down there, well, you haven't managed to buy your gold, but you've earned some premium in the meantime.
Absolutely.
And I agree. This is, you taught me all of this stuff. I've been to your classes. So even though it was in German, I did understand that bit.
Yeah. You always pretend you don't speak German. But you said through 3 days of agonizing Delta, Gamma, Theta, Vega, Rho, Charm, Vanna, and everything, and we still managed to have fun. Was that the class where I actually said, you know what, I'm not going to torture you with black skulls, but I'll be here at 8 o'clock with a couple of gin and tonics in my hand, and we can still go through it? And everybody showed up, funny enough. I don't know whether that was peer pressure or something. Well, anyway, no, you're going to be there in January the whole 3 days. I've told that to everybody who has already signed on, and they are totally excited because the whole quant team is there. So I have said it last week, ratio now for each student. We have half professor, teacher, whatever you want to call it there. So it's going to be a hoot. I'm really convinced about that. Actually, that was one of the questions that came up earlier when we were testing our live streaming capabilities. Because you mentioned it now a couple of times, Elliott Wave. People are absolutely interested because it pops now up on all corners. Elliott Wave theory, how do we do the count and stuff? And I said, I'll ask Nic to give his famous presentation and tell you everything you should ever want to know in 1.5 hours about Elliott Wave.
I do owe you a talk on Elliott Wave, and I here on camera, I promise to deliver.
Excellent. So we've got gold out of the way. I think we were right there. Gold was a good investment this year. What did I screw up completely? Not completely. I wanted to short NVIDIA after the breakaway gap, and I did that through the magic of options. So it cost me pittance, and it taught me one lesson: don't play against the narrative. We've seen that before. Around the 2000s, we had very strong narrative there as well, where normal people couldn't believe what was happening in valuations anymore, or in what the market thought what real valuation should be. At this time, I was still green behind my ears, so I kept shorting and lost a lot of money. I haven't done it since. Now I'm waiting on the sidelines, playing a crocodile and say, yeah, fine, let's see when the market eventually changes to get into there. So my mea culpa on that. On the other hand, I made a lot of money in NVIDIA earnings trades. Before not these earnings, the earnings before, they had a bizarre, obscene option valuation in there. And I thought, okay, the market is now assuming that either it will make 20% tomorrow to the upside or 20% tomorrow to the downside. That ain't going to happen. And I think that was one of the best trades of my year. I sold, I've covered my risk. Obviously, I could have made more money, but I did a structure where I was hedged to the tail on the upside as well as on the downside. And that was a return on investment of 100% in one day. And against my usual, well, cautiousness, I played with a little bit more money in there. Sometimes you have to, but that was very nice. And then obviously, even though I'm a bloody perma bear, because I look at economic data, our models told us, yeah, stay with this stuff. And it paid out so far. Amazing. And that's the point now. I just want to pull the plug, Nick. I want to pull it out. Do I stay in our Goldilocks sectors a little bit longer just to take the final 3, 4, 5%? Or am I now really reducing my asset allocation and put it into, I don't know, long-term bonds? We got that call right fantastically. We actually, as of today, we really, really got the low there. Do I build up my bond positions? Do I get out of these sectors? Do I anticipate that we are eventually getting in quad 3, quad 4? Or am I stubborn and just stay in, even if I don't want to?
Yeah, I think you're still fairly stubborn because you're still looking too much about, you know, the economic thing, and I understand that it's easy to get pulled into this world. But as I say, you know, calm and collective, I think we are in a reasonable run still for the next year or so, or thereabouts, till 2025, just after the elections, probably. You know, I don't see any disasters on the way. I mean, obviously there could be disasters on the way, but you know, my view is it the 2 to 3%? And you know, if you told me that all of your money was in some kind of stock portfolio, in a country portfolio or in a sector portfolio, then you know, we'd be having a conversation on the side. So, and I know you're not like that. So therefore, when people say, what is the outlook? I'd say, you know, at the end of the day, you do have to diversify. You got to be a little bit more international. You know, we diversified, and we also went into, you know, the Asian markets. Some of the non-Japan, they're awful. You know, and emerging markets have also underperformed. But you know, the sectors that are going to perform, I think, you know, emerging markets, I think they will have a reasonable run. So I'm positive for, you know, for that kind of thing, but not to say just US, you know, I wouldn't do it. Just tech, no, I wouldn't do it. I think you need to look at, you know, different, you know, using the RRG approach, which I find an absolutely useful tool for identifying where do you want to land in a, you know, in a stock market. You know, I think if you're managing positions, you are going to be fine. If you sit and hold, then, you know, that's a really difficult thing, because there's likely to be a lot of noise towards the end of rallies, as you know.
Yeah. So that actually brings me to what I want to make the final question. We discussed that obviously in the green room beforehand. We were talking about energy, yeah? And we got invested long before everybody wanted it. Why did we do that? Because it was the most hated sector out there. Nobody wanted to touch it with a barge pole. The whole green economy was at the peak. Banks were talking about not financing energy companies anymore. Carbon fossil was the absolute, you were an idiot when you bought it. So obviously the last seller had already sold. And this crocodile spread was huge. And clever guys like Jesse Felder, ex-colleague from Bayer, he was one of the first who came out and said, listen, look at this. That's what you're going to have. And that gave me the animation. Made me think about it. There are stocks people don't like, or sectors, and then there is what people really hate. What is really hated at the moment in the market, Nick? because
Well,
my contrarian heart, I want to at least put a little money in something everybody hates, yeah, where even I would swallow hard and say, really, I should buy that shit. What's that at the moment? What's that trade for the next 6 to 12 months?
Well, that's a great question, but I think the thing that people hate right now the most is Hong Kong. So if you look at the Chinese and Hong Kong markets, it's awful. It's probably the worst market as far as I can see. It's the one that I kind of like the most, but I don't buy something just to be a contrarian, and that's where I use, you know, technical signals in order to guide me. So it also to guide me when I'm wrong. So, you know, we talked about energy. So you need a signal to tell you when to get in, but you also need a signal to tell you when to get out. And I don't care what that signal is, whether it's RRG, Elliott wave, or my own sort of stuff that I use. Whatever it is, you need to know when you're right and when you're wrong on something, rather than just, oh, when I've lost 10%, I'll get out, because that's not the right thing always, right? But right now, I think if you look across equity markets, you know, what's worst performing of all, I think it's probably China and Hong Kong. And part of that is geopolitics, yeah. So people are fearing that the geopolitical situation, the Americans will force US investors to uninvest or disinvest, I should say, in Chinese and Asian stocks, Hong Kong stocks. Could be that they do that, you know, by decree, and so people are worried as, oh, I'll do it now. But there are other people who say, well, actually, you know what? It's just a matter of time before the Chinese actually sort of get their act together and regrow their economy. It's the only thing that's wrong with China is the real estate. I say it's the only thing. It's huge. It's a huge problem. But every other sector of the economy is doing really well. I mean, they're a great competitor in the world for, you know, for technology, for cars, they're brilliant. But it's just that those sectors are far too small, and I think that's what's sort of one of the major things that's sort of laying heavy over the Chinese markets, and certainly also therefore for Hong Kong. But those are the things that people hate. So good luck if you want to. I mean, I actually do like these markets. I think that they will recover. But
I would have mentioned commercial real estate as well. Yeah,
yeah, absolutely. Yeah. Oh, yeah. I mean, you know, good. Thanks.
Well, because I really don't want to buy it. Yeah?
No,
that is the point. You see the performance, and it's this. But if the base scenario, the base case is still there, yeah, especially United States commercial. Well, I think yes, it's still the best economy in the world. They have the most freedom. If anybody gets the turnaround, then it's the guys in the US. That is the sector which is interesting. So not buying just because, as you said, I want to be contrarian. No, there has to be still a scenario there. But that also speaks for China. I remember in 2008, I had a pension left over from Bear Stearns. Yeah? And I didn't even think about it because I had other problems at the time. Not really, but my financial broker asked me, what do you want to do with it, Torsten? And I said, you know what? We convert it all. And my idea is China is something like Germany after the war. They will build a middle class. Yeah, they will build a strong middle class where people start buying stuff, becoming wealthy, develop a wealthy society. Yeah, and they will need stuff they produce in their own country. So long term, I want to do that. And he said, what risk exposure would you like? And I said, the biggest fucking risk you can find on China. This is my best investment, Nick.
All right.
It's unbelievable. And once a year, when I get my statement sent over, I look at it and think, wow, they're almost better than I am. Yeah, but it's awesome. And therefore, I'm with you on the China or on the Hong Kong call to say, yeah, fine, it's not broken. Yes, there are troubles at the moment in the system, and the real estate is obviously a big concern, but they can work through that. And that is a function of time eventually till it's being solved. And yeah, these are the things where I think what could be the real nice contrarian trade, which still makes sense from economic base scenario in there. I'm with you on that. The real estate market, commercial real estate, I have to have a closer look at that. Anything else? What does everybody want at the moment? Where is barely anybody left to buy shit?
I don't know. I mean, I think, what are the themes of that we should be thinking about? And a lot of that is, this still more reshoring, friendshoring, investments, not building in China, but rather building in Latin America. And I think so LATAM is a good place, if you want to sort of play those types of themes. The other thing is, how long does this technology run have to go? Old economy, new economy, what is it that the next president is going to do? The next president isn't going to say, yeah, we need another Apple. The next president is going to say that we need to invest in infrastructure, we need to invest in our, economy and things like this. So, I question. And as I said before, if I was Apple's head, I'd be looking, go and buy some small caps with my stocks. I think it could be something that America, there's no signal of it right now, but what would a president do? He'd say, let's try and rebuild some stuff here. Yeah, I mean, we sent it away years ago because it seemed like a good idea. Now we can't afford to do that. National security, we need to make our own stuff. Well, if you make your own stuff, then you need to build it. You need a factory, you need roads, and that means that it's a different type of growth to the one that we are seeing now. The type of growth we're seeing in the stock market is flow. When people say, I want to invest in stocks, they end up buying 70% of it is US. They end up 5% of that is going to be Apple or something like that. Really? Do they need the money?
Yeah, no, with you on that. No, it's just this, especially that's one of the lessons I learned out of the 2000s. When the narrative is strong, there's no way of fighting against it. And the other lecture or lesson I took out of it, when the narrative actually really changes and develop in the system, you still have plenty of time to play the other side. It's not
absolutely.
It's not going to end in a weekend. It will give you, even things have become faster, but it still gives you then sufficient time to play the downside, as long as you don't get caught fully loaded up on long investments on the old stocks in there.
That's a lesson also of, coming out of things like NVIDIA. You can say, I disagree with it. Well, okay, then disagree with it. Let's wait for the signal if you disagree with it to say, is there something to tell me to sell it? Fortunately, you did, the smart option trade to make your money on that one. And it's a great thing.
Oh, that's simply my process. Yeah, I have an
idea.
Absolutely. I test it with little money. If it doesn't work out, I'll wait. And that's what happened. Well, there has to become something with a gray hair. That's why we have it a gray market talk. Yeah. If you knew everything already when you were 20, I think it would have been a different game anyway.
Yeah. Well, you have to tell me when you're going to go into Bitcoin, and I can get out. So, because that
was actually funny.
That was the other thing. I
told you the story. One of my good students who made a bloody killing in Bitcoin, Ethereum, Doge, and all the crap. Yeah? He called me. When was that? When was Bitcoin trading at the absolute top?
It would have been, I guess, December 2021, something like that.
Must have been around there. And he said, you know what? There's a new currency coming out, Thorsten. Would you like to invest? We assume, honestly, that it will make 30,000% or something like that. And you know me, I've never touched that stuff with a barge pole. I got this phone call and I thought, you know what? I think I should put 10 grand into that. What's the worst that could happen? You lose 10 grand. But otherwise, I make $3 billion. Wouldn't that be awesome? And the moment I caught myself, as an ardent, I'm not buying cryptos. I don't understand it. It's not my investment vehicle. You have fun with it. Don't have to be involved. This moment, I knew we had a top. And if I would have traded in cryptos, I would have shorted it.
Yeah,
but as I don't touch it, because I was really there, greed and foam in front of my mouth. Say, "Ooh, wow, yeah, that's."
You could have. I mean, a guy like you would have said, "Okay, I don't need to play Bitcoin. I can just sort of do some option strategies on micro MicroStrategy. So it's a US corporate that's highly leveraged into Bitcoin. If you want to play the bull side, you want to play the bear side, there's probably a great instrument to play for you.
Well, let's put it that way. One of the big lessons I think I can give away is stick with what you know.
Okay, that's fair enough. That's fair enough.
That's why I stay out of these very, very exciting. But then I have friends I can always interview and satisfy my curious or my intellectual curiosity on these topics. That's why I have you for this stuff. Yeah, you're driving around with your 3 super yachts in Monaco, so I see that. What can I say?
Taken.
What can I say? But no, it's a different world for me. I observe it, and I'm obviously very open to another tip just to see what's happening.
Yeah. I mean, when you get another tip from, I think we know who that is. Then do let me know.
I just want to see it. Could it be? That's what I asked you as well. Could it be seen as a proxy for gold? Yeah, something where.
Yeah, I mean, for some people it is, right? For people who, just to quickly. So if you wanted to leave the country, you say, okay, I've just about had it of this country. Let me just open the drawer and take my bar of gold with me, and then you go to the border. And then somebody says, well, do you happen to have anything in the car, sir? And you say, well, just this shiny little thing. Well, I'm afraid we can't let you take that out. So you end up leaving that there. Whereas with Bitcoin, of course, you only need to remember 24 words or thereabouts. And you say, have you got anything in the car? Nothing. I've got nothing. And you go and plant yourself in some nice country somewhere and then, connect to the internet. And then you've got your stuff with you. So for some people, it is a store of their wealth. Yeah. I mean, that's the reality. Is it like gold? I think it's only gold when central banks start to buy it, and I can't really see that's happening. There are some experiments with crypto and sovereigns, but I think they're more. This thing hasn't broadened as we're really early days. 10 years time, let's have a look. Not sure.
So we're staying in the markets as they are at the moment. We keep cautious. As we have been, we follow our models and the rules.
Yes.
You gave me great advice during this year, especially on the price action side. Yeah, not getting too carried away with all the fundamentals, which, funny enough, as somebody who is an options market maker who believes in randomness, still focus so much on economic data. But it's also, well, it's fun. Yeah, you look at it and you think, oh, can I outthink the market? My experience showed me, I was asked by a student, said, so why do you actually believe in randomness? And I said, well, you have the same experience. When stuff was hot, I had to sell it. And when nobody wanted to have anything, I had to buy it. Somehow I managed to survive. There is actually a very good point of or chain of evidence that market seems to be random, because otherwise guys like you and I, who were market makers, would have been screwed all way long. Huh? We would have never survived more than 3 months. Somehow there seems to be a very random element in there. If you have your standard deviations in line and do your risk management, you should be all right.
I always, I never made prices that way. I always took a view, and I made some really silly prices, but I always had a view on direction, and that's just how I never relied on the randomness thing.
I was always drilled. Yeah, let's say one big fund wanted to hedge something, yeah? And they wanted to buy a huge downside hedge. So, and I was of the opinion, yes, they are actually clever. They know what's going to happen. I don't really want to sell this stuff, so I make a defensive price. Yeah? 5 minutes later, I have my boss standing behind me and said, Goldman made a better offer. For fuck's sake. So what am I supposed to do? Well, yeah, make it better. We want to beat them. And then you sit there and you think, okay, fine. And that's where I come in with you in line. So at the same time, while you're making the price, you start selling futures, yeah, so that nobody sees it. I'm tapping with my hand secretly. Okay, fine. Yeah. Oh, look, the market is coming a bit under pressure right here. And you look over to your colleague, he's doing the same. It's always the same game. Yeah? It was a lot of fun doing it while we did it. I believe in this random thing because it gives somebody a fighting chance who says risk management and randomness under observation. I'll be doing fine. And the rest is, well, intellectual curiosity, which helps us to shift it a little bit in our direction. So that's why we're talking macro, right? We want to have this divinity of the future to get an idea what the crystal ball might give us or not.
I just say we need a basic understanding of what's going on here so that we don't get sort of fooled by it. A lot of the stuff that we read and stuff that we see, we need to sort of know enough to avoid being fooled by the people who are just snake oil salesmen at the end of the day. And I think that's what you and I kind of do.
Then let me close. Oh, no, before I close, any famous last words, Nic, before I made the final last words?
No, have a lovely Christmas.
Thank you. You as well. And obviously, all our viewers, have peace in this time. Enjoy the Christmas. I love it. I was actually expecting Nic to wear a Christmas jumper as well.
I wasn't allowed.
That's all right. I have my Captain America on. We still like America. And I close with the last words, which I've borrowed again from a Brit, Shakespeare. The rest is silence. Have a wonderful Christmas. Bye-bye.
Bye-bye.